So, good morning everyone. My name is Irene Conanan from BSBF FM22. My report is a continuation of types of mutual funds. But first, what is mutual funds? Mutual funds is an investment company that invests its shareholders' money in diversified portfolio of securities. So, under that, there are several types of mutual funds. First is the growth funds. In continuation of that, the second is aggressive growth funds. It is also called as performance funds that tend to increase in popularity when markets heat up. These funds often buy stocks of small and seasoned companies, stocks with relatively high price earnings multiples, and common stocks whose prices are high volatile. These They are also use option fairly aggressive various hedging techniques and perhaps even short selling. Under that, these techniques are designed to yield big returns. So aggressive funds are also highly speculative and among the most volatile of all mutual funds. When market, sinasabi na kapag daw yung market maganda or good, yung aggressive growth funds din is ganon. Pero kapag daw yung market niya is bad, the aggressive growth funds experience substantial losses. This is yung value funds. It is confined their investing to stock considered to be undervalued by the market. The funds looks for stocks that are fundamentally sound but have yet to be discovered. These funds hold stocks as much for their underlying intrinsic value as for their growth potentials. Value funds looks for stock with relatively low price earning ratio, high dividend yields, and moderate amounts of financial leverage. Sinasabi dito na they preferred undiscovered companies that offer the potential growth rather than those already experiencing rapid growth. So, mas pinipili nila yung may mga potential kaysa dun sa mga mataas na yung growth ng stocks. So, yung value funds are often viewed as viable investment alternative for relatively conservative investors. Sinasabi nila na hindi daw madali kasi it involves extensive evaluations of corporate financial statements and any other documents. So, next is yung equity income funds. It emphasizes current income by investing primarily in high-yielding common stocks. These funds invest heavily in high-grade common stocks, some convertible securities, and preferred stocks. And occasionally, even junk bonds or certain types of high-grade foreign bonds. Sinasabi dito na yung equity income funds emphasizes their dividends and current income na tapos yung mga funds na to nagtatend to hold higher quality securities that are subject to less price volatility than the market as a whole. Tapos sinasabi pa na as far as their stock holdings are concerned, they lean heavily toward blue chips. Yung mga blue chips, yun yung risk in very low. Nagre-risk sila sa pinakamababa. Tapos yung public utilities and financial shares. Tapos yung speculative stock, yun naman yung risk in very high. Parang salungat sila ni blue chips. Yung balance funds, so from the word itself, balance. So they tend to hold a balanced portfolio of both stocks and bonds for the purpose of generating a well-balanced return of both current income and long-term capital gains. They are much likely like equity income funds, but balance funds usually put more into fixed income securities. Generally, they keep at least 25% to 50% of their portfolios in bonds. In addition, balance funds tend to confine their investing to high-grade securities including growth-oriented blue chips, stocks, high-quality income shares, and high-yielding investment grade funds. So, sa balance funds, they are usually considered as a relatively safe form of investing in which you can earn a competitive rate of return without having to endure a lot of price volatility. Next is yung growth income funds. It is also seek a balanced return made up of both current income and long-term capital gains, but they place a greater emphasis on growth of capital. Sinasabi dito na yung growth and income funds are most suitable for those investors who can tolerate risk and price volatility. Sinasabi pa na it is not unusual for these funds to have 80% to 90% of their capital in common stocks. And they tend to confine most of their investing quality issues. So, growth-oriented blue-chip stocks appear in their portfolios along with their fair amount of high-quality income stocks. So, next is yung bonds funds. Bonds funds invest exclusively in various types and grades of bonds, from treasury and agency bonds to corporate and municipal. Income is the primary investment objective, although capital gains are not ignored. Balance funds, stop mo na sis. Under that, meron siyang three important advantages of to buying shares in bond funds rather than investing directly in bonds. So first is the bond funds are generally more liquid than investment bonds. Next is they offer a cost-effective way of achieving a high degree of diversification in an otherwise expensive investment vehicle. So, yung pangatlo naman, yung bonds funds will automatically reinvest interest and other income and thereby allowing the investor to earn fully compounded rate of returns. So, dito sa second, hindi ko na mentioned na most bonds carry minimum denominations of $1,000 to $5,000. So, meron siyang different types of domestic bond funds available to investors. First is yung government bonds funds which invest in US Treasury and agency securities. Sinasabi dito naman, the funds in this category may invest in bonds with short, intermediate, or long-term duration. Yung government bonds funds invest primarily in bonds and other debt instruments issued by federal, states, and local governments. So, next naman is yung mortgage-backed bond, which put their money into various types of mortgage-backed securities of the US government. Under that, these are appeal to investors for several reasons. Marami daw siyang reasons kung bakit daw appealing siya sa mga investors. First is yung they provide diversification. Next is they are an affordable way to get into mortgage-backed securities. Next is they allow investors to reinvest the principal portion of the monthly cash flow, thereby they enabling to preserve rather than consume their capital. Next is yung high-grade corporate bonds funds, which invest chiefly in investment-grade securities rated BBB or better. So, yung under ng high-grade corporate bond fund, sinasabi na it is a type of corporate bond that offers a higher rate of interest because of its higher risk of default. So, yung ano naman, yung high-yield corporate bonds funds, which are risky investment that buy junk bonds for the yields they offer. So, next is yung convertible bonds funds, which invest primarily in securities that can be converted or exchanged into common stocks. These funds often invest some of the price stability of bonds along with the capital appreciation potential of stocks. So, next naman is yung municipal bonds funds, which invest in tax-exempt securities are suitable for investors who seek tax-free income. Sinasabi dito ni municipal bonds funds can be packaged as either high grade or high yield funds. So, parang dito pumapasok yung dalawang yan sa may municipal bonds kasi parang sinasabi niya na pwede siyang i-package. Tapos, under ng municipal bond funds, it is also called as single state funds, which invest in the municipal issues of only one state. So, last is yung intermediate term bonds funds, which invest in bonds with maturities of 7 to 10 years or less, or offer not only attractive yields but relatively low price volatility. So for the last of topic is money market funds. The money market funds, it was a new idea that applied the mutual fund concept to the buying and selling of short-term money markets instruments. So, yung unang money market funds was set up in November 1972 with just $100,000 in total assets. So dito naman, sinasabi na the idea caught on quickly and the growth in money funds was nothing short of phenomenal. Sinasabi din dito na for the first time, investors with modest amounts of capitals were given access to high-yielding money market. Under that, meron dyang several different kinds of money market funds. First is yung general purpose money funds, which invest in all types of money market investment vehicles from treasury bills and bank CDs to corporate commercial papers. Sinasabi din dito na the vast majority of money funds are of this type. They invest their money whenever they can find attractive short-term yields. So next is yung corporate securities money funds, which were established as a way to meet investors' concerns for safety. Under that, may sinasabi din na yung investment at least 99.5% of its total assets in cash, government securities, and purchase agreements that are fully collateralized by cash or government securities. So last is yung tax-exempt money funds, which limit their investing to very short tax-exempt municipal securities kasi their income is free from federal income and they appeal predominantly to investors in high tax brackets. So all in all, then lang pumapasok lahat ng report ko. So the next reporter will continue the types of mutual funds and other its uses. Thank you.